An interest rate rise by the RBA seemed inevitable yesterday, but the decision to hike the cash rate by 25 points left many in shock.
For more, let's bring in today money expert Effie Zahos.
Hey, Effie.
Effie, did it surprise you yesterday?
Well, remember we spoke about, I actually thought they'd go to 0.4. I thought they'd go hard and fast, so they've kind of gone in the middle there, 0.25. So not too bad.
OK, break down what that means for people at home when they see that rate. Doesn't really mean anything, but what does it mean at home for repayments?
OK, so essentially that is what you're basically looking at on a $500,000 mortgage. That middle figure basically shows what is the medium dwelling in Australia. You borrow 80%. That's the average loan there. So that's what most people will be looking down the barrel today as far as interest rate hike and what it means.
So who moved already?
Well, the big four all moved. CBA came out first out of the gate yesterday, obviously. NAB just snuck in their announcement this morning.
But weren't they already doing that? Weren't they lifting their rates?
Fixed rates are already going.
Yeah.
So what I've got here, these are their cheapest rates. You may be looking at that and thinking, whoa, I'm not paying that with my major bank.
No.
Probably paying something on a package loan. That's what they tend to sell. They're a little bit more expensive. They're different LVRs there. And what that means is, typically, like I keep saying, new customer, bigger deposit, you get a better rate. So my tip here is have a look and see what are you actually paying. Call your lender and say, hey, I just saw this on Today's Show. Why is it, lower there, and see if you can get that rate.
OK, so if you're wanting a cheaper rate, where do you suggest looking first?
So, Ali, this is interesting. I mentioned that not all banks will increase by the same amount, and this is what's happened. So I looked at the cheapest rates in the markets right now. So we know that 1.79 rate I keep talking about. Have a look at this. The first one there has come out and said we are not changing our rate. That's interesting. The second one, I suspect they will move. The third one actually did move, 1.79 to 1.99. You can only need a 20% deposit for that one. The other one, you actually need a fat deposit, like 40% deposit or equity. Then as far as the fixed rate, look at that, 3.28. The standard rate's 2.92. So what I'm trying to say here is it's a little bit higher, but only a couple of rate hikes away, and you can have that, certainty for 3 years that you're locked in at that rate. Something to consider.
So there's no reason for some people out there to panic, but there are also people out there right on the edge who have bought in a market that's been hot. The interest rates have gone up, and now the value of that property may be coming down.
Absolutely. And Carl, get online. They're actually posting now already, I noticed. If you can't afford your repayments, contact us and we'll see what we do. We've got to remember they're saying the cash rate's going to be 2% next year. If you're buying, I'll give you an example, in Sydney, a property, $1 million plus, right? 20% deposit. If they're saying the cash rate's going 2% next year, your repayments are going to go up by an extra $1,000. So the pain is real. We need wages to go up. We need prices to fall down fairly well, and then, maybe a comfort zone. But the good news, guys, there were rates increasing on saving accounts yesterday. So I got the top term deposits. I almost fell off my chair when I saw rates as high as what are we looking at?
85.
Yeah, 1.85, 2% there.
It's not a lot though, is it?
It's not.
It's more than what it was.
It's not. And also the government's come out and said they're freezing the deeming rates, which is good news for pensioners because these rates will slowly creep up. Not fast, because remember, we've got a lot of money in bank accounts and they don't want to pay us interest on that.
Interesting times, Effie. Thank you.